Wendy, I have to say, though, 10%, that's not a lot from current levels.
I think next year is going to be volatile. We're looking at the upside, and the upside could be better. We set the upside target at 80 on MSCI China. That's going to get us back to the February level. And if we look at APAC, MSCI Asia ex Japan, the upside could be a little bit higher if we see by the end of the year that there is a synchronized global recovery. Asia is recovering ahead of the world, but generally, when it's not synchronized globally, the upside could be capped while Asia's waiting.
What's left in this rally then, Wendy? We had tech, you had casinos, you had consumer sectors that were actually kind of leading the way at first, travel sectors alike. What's left? What's gone a bit too far?
A lot of the stocks are back to where they were in August, but they're also laggards and on the quality side. So within the consumer names, there are names that haven't participated. So among the global clients, I think when they're looking at the universe, they'll look at what they used to own and what they used to like. And I think initially it was narrowly focused on reopen, seamed names. Now people are looking at a broader cyclical upturn. But the transmission of that, how that's going to work, I think is a question. Whether some of that spill into infra is another question. But I think for 2023, there are four broad types of opportunities, Yvonne. One is in the consumption area. The other one is in the infra, including renewables and traditional infra. Then local manufacturers in advanced manufacturing. And then also the financial sector survivors. So I think value will do well, and then growth will also continue to do well.
Okay, what about energy? That stood out as a sector globally, not just in China, globally, that's really done well this year. Do you fade that next year as far as, well, not just China, also across Asia, Wendy?
We're overweight energy for China, but in South Asia and ASEAN and India, we're a little bit more cautious because that's at a later earnings cycle. We're looking at earnings adjustments. In China, the downgrade is mostly done. Korea, Taiwan, you still have about 8 to 9% to go, and ASEAN and India are getting started. So we're a bit more defensive in ASEAN and India. But in China, we like energy, both renewable and conventional energy, and the consumption of crude per day is already above pre-COVID level, and it's going to go up with reopen.
Wendy, since you mentioned earnings bottoming out, we've put that on a graphic for you. So do you actually now think that we've seen the bottom in earnings revisions on MSCI China?
MSCI China, I think we're very close to the bottom. You're seeing more companies cutting costs, and that's helping margins. And then also in the months of November, we're seeing the numbers being revised up. And then when we look at the business cycle indicator, Asia troughed in September and entered recovery in October, and decidedly so in November. So yes, we think the earnings have troughed.
And in terms of just the cyclical recovery that you mentioned, what other markets can actually benefit from that reopening story in China? Do I tilt more towards North Asia for next year, Wendy?
Exactly. We think the divergence we saw in return between North and South Asia in 2023, that is going to converge. So we're positive on Korean and Taiwan tech, although I think sometime in 2023 and likely late 1Q, early 2Q, people is going to gauge the recovery in DM markets, because in the past, we haven't seen a full recovery in tech without DM recovering. And so at the moment, JPM is more positive on tech names with China exposure.
Okay, what else? Property. Let's. I mean, that has its own considerations, Wendy. Talking about valuations not still not back to historical averages. How are you looking at that sector now from an equity perspective? And have you actually seen early signs of demand turning?
Not yet. I think property is where things are not entirely out of the woods. So from a strategy perspective, we think it's going to trough in terms of secondary home prices in 2023. We haven't really seen the secondary homes clearing itself. Similarly, we haven't seen memory inventory clearing the market. So I think structurally, the overvaluation in China property isn't as significant based on our data comparing to what happened in the US and what happened into Japan. But there's a wrinkle. I think there's going to be more secondhand offering coming into the market. And once that's cleared next year, then we're getting to an area of stabilization.
What do you think is the biggest risk for 2023 in China, Wendy? I wonder, is there a risk to this sort of reopening that maybe investors haven't quite thought too thoroughly on? Is there a risk to geopolitical tensions that might heat up next year? I mean, what are you looking at as the key risks?
I think there are three sort of risks. One is that the wobbliness or bumpiness in recovery. I think this is why people can be quite tentative and then finger, on the trigger when they think the rally may be coming to a pause. So I think that's one. The other one is what we described in the property market. If the secondary prices do drop, but that would actually be a good thing because upgrade demand would come in, and upgrade demand has much deeper pocket than first-time buyers. But we need that clearance event. And then I think it's the generally tightness in the global financing environment. We're looking at about 100 bips hike in the Fed rate and then $1 trillion in QT. So as this environment continues, there could be one-off credit risks or concerns on twin deficits within the region. And lastly, geopolitical issues, which is really hard to forecast, but it looks like after G20, things are starting to stabilize a bit.